All right, everybody, good morning. Happy Friday. Happy 1st of May. I'm Rob Booker, and welcome to our coaching call. If you're not familiar with what the coaching call is, it's just a part of my everyday trading life where I get on a call and we look at some charts, we look at some slides, we teach some lessons, we take some trades. And today I thought I would share it with everybody to celebrate the brand new month of May and some of the states and countries around the world reopening slowly but surely. Don't forget to wear your mask. And for those of you that are parents, maybe we're close to the end of homeschooling. Maybe not if you love it. Maybe you love doing that. But I'm so happy that you're here. Welcome. I'm excited to spend some time with you today. So, hey, everybody, I'm here on YouTube. I'm here with my coaching students that are with me every day. And we're going to look at some charts. We're going to look at some slides. I'm going to share my screen and we're going to do some analysis. So here we go. I'm going to pull up the old coaching call slides. And what I usually do here, although it's kind of weird, is I'll keep the slide presentation view just like this. I won't go full screen just so I can see exactly what slide is coming next. And it kind of helps me just keep things organized. So remember that all trading involves a substantial risk of loss and is not suitable for all investors. And past performance is no guarantee of future results. And this presentation is intended to be informational and educational. It's not a solicitation to buy or sell any particular financial instrument. And if you need personal financial advice, you should consult your financial advisor. All right. What we do at the beginning of the month is we remind ourselves of what we look for, what kind of trades we look for, and then we actually set some goals. So I want you to, if you've got your phone nearby or a pad and a piece of paper or whatever else, I want you to spend some time here together with me. I want you to write down some goals as we go along, some goals for May. And they're like affirmations or goals or positivity about what it is that you know you can do and what you know that you can accomplish. So here's what we look for. Just for those of you that are brand new to this group or brand new and never have seen me do one of these presentations before, what we do is we scan a number of lists, a magic formula investing list, an insider money signal list. We look for where the money is flowing and which insiders, which directors, company officers, and investors are buying shares of their own companies. We look for a bounty spreadsheet. We have our coaching students add financial instruments to a spreadsheet. We call it the bounty spreadsheet because if you add a financial instrument to the spreadsheet and that trade becomes a win for me, you get $500. And we basically look at about 200 financial instruments. We've also recently added in strike zone watch lists, low-priced stocks that are really ready for a substantial bounce. And we're going to talk a little bit about how powerful that list is and how much money is contained in just that one watch list alone. We look for a very particular type of counter trend trade on 4-hour charts. We look for multiple profit circles and divergences and missed pivots. We look for fundamentals that back up our point of view. And we're going to look at an example of this today. And so you'll see me break this down. We look for a very particular kind of trend trade. If you love trend trading, I think you're going to like what we have today because we also have some trend trades to look at. And I'm going to break down one of the biggest trend trades we've seen so far this year, and we'll talk a little bit about that. We also look for two kinds of trades here in the group. We look for trades that could be worth $1,000 if you have a $2,000 account, and trades that could be worth $57,000 if you have a slightly larger account, like $5,000. And what I mean by this is every month we try to plan a bunch of trades that are going to make $1,000 and then one trade that's going to be bigger. And I don't have any other way to describe this except for at the beginning of the month, I kind of know that there's either a really giant trade brewing or there's kind of an okay sized trade brewing. And this month it's one of the big ones. So earlier on this year, for those of you wondering how this goes, earlier on this year, we took a trade. I'll show you the trade today. I made a mere $23,000 from it and we just gave it away. But one of our coaching students made $48,000 and another one of our coaching students, not due to me, right? This isn't reflective upon me, ended the month with $2.1 million in gains, which was pretty stunning. And those are with $20,000 positions. So that's, taking a pretty substantial position, but the risk to reward was just outrageous. I think another one of those trades is setting up now. So we're going to try to track that down. If you're here in the coaching group and you join with me every day, thanks for joining me today here on YouTube. And if you're brand new, once again, welcome I'm so glad you're here. And we always know our max loss and we know our profit goal. We'll talk a little bit about this today, but what I mean by that is we always know that if we have a smaller account, like $1,000 or $2,000, we always know that our maximum loss is about $100 and $200 at the most. We're going to have to take a little bit more risk with a smaller account. And I always trade a small account along with the group. And then I trade my larger accounts along with the group as well. We always know our profit goal as well. And that's going to come into play when we look at BCRX today, because I'm still in the trade and it's still moving in my favor and I'm not giving up on the trade and I'm letting it mature into what I think will be a pretty substantially sized winner. We manage losses by the numbers, which means if it reaches our max loss, we wait 24 hours at the most and then we close it. But we manage our profits by the charts, meaning we can always let a winner run even longer if we choose, even if we've reached our profit goal. And if we trade options, we look for options that are at least 90 days away from expiration, maybe 120. And we buy options that are near the money, at the money, or in the money every single time. Okay, that's what we do. I just want to, I'll stop screen sharing for just a second and welcome those of you that are here and say hello. Super excited for you to be here. Once again, thanks so much. All right, I've got the goals ready for May. So I'm going to click here. I'm going to go back to sharing that tab. If I don't periodically unshare, this can crash. So I like to keep this back and forth. Okay, our May goals. We want to find and take 5 trades that make $1,000, even if you have a $2,000 account. Like we've spent the last month or so as a coaching group trying to get situated and organized to more effectively and profitably trade small accounts. So this month, in the month of May, I want to find and take 5 trades that could be taken with even just a $2,000 account that have the potential to make $1,000. These are all going to be strike zone trades. These are all going to be trades that are small cap stocks with lots of volume that have shown a pattern that suggests they're going to bounce and bounce big time. It's always buying and it's never options and it's always stocks and it's always buying a bunch of shares of a highly liquid, high volume instrument that has the potential to move. And I scan about 400 stocks every week to find those trades and teach you how to do it as well. And then we're going to find and take one big trade worth $57,000 for every $5,000 invested. This means that back in January, I took a $5,000 trade. We'll look at the chart. I'll break that trade down for you and show you exactly what I saw. That trade ended up a $23,000 winner. If I'd kept it open through March, it would have been a $330,000 winner, but I closed it early. And definitely, it's never a mistake to take profit. No one ever went broke taking a profit. This month, we're going to learn to trade companies entering bankruptcy, the bankruptcy bounce. I may eventually one day have a product called Bankruptcy Billionaires, which is an oxymoron, paradoxical equation. But there are companies that are declaring bankruptcy whose stock prices can bounce suddenly. And we'll talk about that during the month. And this month, we also want to increase your self-reliance so that you can do this stuff on your own. All right, one last slide here before we get ready, just to break down our agenda for the day. It's May 1st, 2020. We're going to talk about what Macy's is worth, what Chewy Incorporated is worth, what's Wayfair worth, W. So look at M, CHWY, and W. That's what we want to look at next. So I'm going to unshare my screen. And then what I'm going to do is reshare the chart on my Chrome tab. And we're going to look at Macy's. We're going to look at Wayfair and Chewy. Okay. Why don't we start things off actually looking at our giant trade from earlier in the year. So this is the UVXY. We'll start things off with I want to teach you some stuff. So if you want to learn, you're in the right place. When a stock, even an ETF based on the VIX that suffers from contango and should always go down, not up, even when that's falling, and it's like catching a falling knife, there are scenarios in which we get what we call the perfect trade, the perfect counter trend trade. It's got bullish divergence, and it's got these 2 bullish profit circles at the bottom. When these things happened, and way earlier than we should have, in late December, early January, I started buying calls on the UVXY. You could have bought the UVXY for $10, $11, and so on. I bought $5,350 worth of UVXY. We can actually probably pull that up on my Robinhood account. You can't see that because I'm only sharing one tab right now, but later on in the broadcast, we'll share that tab and I'll show you the Robinhood account and I'll show you that trade and blah, 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 blah. Anyway, I bought all those calls. We bought them as a group. Some of our traders did, some of our traders did not. And some of our traders, even inside the coaching program, in the interest of full transparency, stopped out of the trade because it started going against us at first. Thankfully, some of us stayed in the trade. And for those of that didn't, we find other trades later on. This trade eventually became a giant win. And our bet wasn't about the economy tanking or being able to predict the coronavirus. It wasn't about any of that stuff. It was just pure technical analysis that there is a probability associated with an ETF and a financial instrument at a certain point in time. It's just probabilities. And so before we knew anything or even cared about the China virus or whatever else, we bought calls on the UVXY. I bought $5,350 worth of calls, and this thing popped. And I got out of this trade right here with $20,000 or so. And Jeff, our coaching student, wrote it, bought more, wrote it. I can't remember where his final exit was, but he ended up with, in all, not just on trades recommended by me, but trades that he had also planned himself. Also, he's a self-reliant, super smart, amazing person. Ended up with about $2.1 million overall. We had another student do $48,000, and then some students do $1,000 or $4,800, and all of which, you know, were taken with reasonably sized accounts. Once again, I only took $5,350. If I'd kept my position, by the way, that position would have been worth $330,000 at the peak of the UVXY when volatility was at its most extreme. I always think that's fun to talk about, but I don't consider it lost money because I did well and we were able to help people and give some money away and help people in need when everything hit the fan and whatnot. So that's what we look for. That's the kind of thing that we look for. And with that as the groundwork, in a moment, what I'll do is I will pull up the Robinhood account. It's just having trouble loading right this second over here, but we'll pull that up. We'll get it going. We'll get it going. We'll switch over to Macy's. So we look for a very particular kind of, actually, let's look at Wayfair first, because we look for a very particular kind of trend trade and counter trend trade. So this is Wayfair. I want to talk a little bit about what Wayfair is worth. Wayfair has had a 500% increase since the lows in the middle to mid-late March 18th and 19th. A 500% increase. There are no other stocks that were priced more than $20 per share. In fact, there were no other stocks except for penny stocks. And even penny stocks, there were only 52 stocks that grew by 500%. 49 of them were worth 1 penny or less and were over the counter and not even tradable. And the rest of them were small cap stocks. Wayfair is in a group by itself. It was a gigantic win over the course of the last few months. And the question is Wayfair really worth, is Wayfair really worth $126 a share or $134 a share? What in the world is going on here? So we take a very particular kind of counter trend trade. So I want to break down some technicals for you. The weekly missed pivot in green, upcoming, this is the May monthly pivot. It will hit the May monthly pivot. Let me repeat that. It will hit the May monthly pivot. I don't know when, but it's going to hit the May monthly pivot. It missed the weekly pivot last week. It missed the weekly pivot the week before. It missed the weekly pivot the week before that. And it missed the weekly pivot the week before that. And it missed the weekly pivot the week before that. It is almost statistically impossible for a financial instrument to miss 4 weekly pivots in a row, let alone 6. It's almost statistically impossible to imagine, especially for a mid-cap or a mid-sized company. It's almost impossible. So what is the reasoning behind Wayfair doing this? It's a lot of FOMO and people chasing other people. But do the financials back up this? Well, we'll look at the financials in just a moment. But before we look at the financials, I want to look at the 60-minute chart. I want you to see these bearish divergences, these missed pivot points. And then I want to look at the 15-minute chart, and I want you to see that we've got this bearish profit circle. This is exactly the kind of counter trend trade we took at the beginning of January. It was a financial instrument that started to give early warning signs of missed pivots and divergences. And then on shorter time frame charts, started to show a turn, Now, I'm not guaranteeing that Wayfair $130 strike and the August 21st expiration is going to be the $57,000 trade. But I think it's got some potential. I know it's at least $1,000 trade. I know it has the potential for that. And even if you bought one contract, that would be, expensive for a lot of people. So we'll look at a couple other trades today, and we'll look at a couple of other things. But this is an incredibly statistically probable bearish setup that is the inverse of the UVXY. The UVXY had fallen statistically beyond the normal range of what it could even fall, even with contango. And Wayfair has risen even beyond what it should possibly be able to do, even if it were the most profitable company in the world. Now, the most profitable company in the world did not grow by 500% during all of this time. In fact, that's the quandary we're in right now. How is it possible? So let's look at the fundamentals behind Wayfair. I want to take some notes here, folks. I don't know if you like geeking out on this stuff, but if you want to know how this stuff is done, let's look at the statistics on Wayfair, just using Yahoo Finance's free version if you got it. Go to statistics, scroll down, and let's look at some numbers. Return on assets, negative 24%. Profit margin, negative 10%. Operating margin, negative 10%. Revenue, 9.13 billion. Earnings, negative 819, even before interest, taxes, depreciation, and amortization. Net income, negative 984. Is this a company that deserves to, even if it had blockbuster sales? No, definitely not. It doesn't justify any of it. It's a completely unjustifiable move, technically and fundamentally. They have $987 million in cash, and they have 86. Look at this current ratio right here, folks. The current ratio, 0.86. That means they have 86 pennies, 86 cents for every dollar of short-term debt that they have. It means if they are at all in danger of defaulting on their debt, which could theoretically happen, it means if they have trouble paying the interest on their debt, they're going to be in a lot of trouble. There are a lot of companies out there that don't make enough money to pay the interest on their debt. Wayfair is in this really weird position of having been treated like an internet company from the early 2000s. No one cares about the actual profitability. They seem to have got caught up in some other story or thing that is going on right now. And it's unjustifiable. It's statistically unlikely to produce the amount of profit that it would need in order to justify the price that it's trading at. So that's Wayfair. Wayfair should be worth about, I don't know, much less. So I'm going to pull up the UVXY. I'm going to show you the trade in the interest of being, I don't know, transparent and showing you exactly what it is that I did. Let's look at the history that I have. Show more history. Yeah, there we go. I'm going to pull up my screen. And if you want to work together with me, want to plan trades like this every day, you can click the link. Go to the link below where you see right now, this robbybooker.com/apply, and you can apply to work with me. We don't take very many folks, but we've opened it back up. And let's take a look at the Chrome tab that shows my account. So this is my Robinhood account. Started with, I've taken some money out of it recently. I think it's at $45,000 or whatever. So it's a mid-sized account right now. And started with $15,000 in this account last year. We're up to 45. My goal was to get to 100, but we're on the way there in this one. Okay, here's the call. I spent $5,355. Excuse me, I was $5 off. I bought 35 contracts for $1.53 a piece. I bought the March 20th $12 calls. It's just a button you push inside of your trading platform. I tried to buy more and didn't get filled. I tried to buy more of them. I didn't get filled. And I closed those out at $6.65 each for a $23,000 closeout. Those were eventually worth $72. It was more than that. They were worth like $72 at the high point. So I missed out on like $65 more per contract on those. But that's the trade. That's what we did. And here's my account right now. I'm not just cherry picking or showing. I'm down $705 today as I wait for BCRX and a couple of other things to come around. So you can see my real account. That's my real. That's one of my actual real trading accounts. This is where I trade stuff. You can see the actual trades I have. My TLRD. Me and Michael Burry are long this. That's going to expire. Well, I don't think it's actually going to expire worthless. So I think that's actually going to be a profitable trade, even though it's garbage right now. I have an IWM put. I'm long TV. I'm long REZI, and I'm long BCRX. We'll look at BCRX later because I think it's one of the most interesting ones that we have that is potentially still a trade that you could take. All right, let's go back to the charts and let's ask the question, what is Macy's worth? Macy's is probably worth nothing. Macy's is probably going to declare bankruptcy unless everything opens and unless they make a whole lot of money really soon. Now, there are real estate developers and others that will probably swoop in and help them out. So I could be wrong about this, but this is a downward trend, right? This looks like a downward trend to me. It looks like a downward trend to you. So let's talk about a trend trade. Macy's is in an obvious downtrend. Let's not kid ourselves, right? And it's in a downtrend for a very important reason. All of their stores were closed and they didn't have enough money in the bank. They laid everybody off and it's starting to roll over. You could call this a bear flag formation potentially. So down and to the side and then back down again. It was trading just recently for around $5 a share. And I literally just shorted the stock, but I would have been happy to buy a put on Macy's as well. The actual price of Macy's, the actual fair value of Macy's is $0. I think this is a zero. This is worth $0. I think it will potentially enter bankruptcy. So I shorted the stock. This is a trend trade. It has moved down. It's rolled over sideways, and it seems like it is potentially going to drop further on fundamentals. And technically, this is a bearish trend. You look at the 60-minute chart. It's bearish. And if you look at the 1-hour chart, we've had some spikes. We've had some short-term jumps, but we've had multiple red bearish profit circles that all denote or are an early warning sign of impending doom for a financial instrument. How is the stock market doing today? Not great. Okay, not great. SPY is probably not doing great either. I'd sell some, anyway, we can get to that another time or later. Okay, let's look at, so that's Macy's. Let's look at Chewy. I hate to be negative, but oh, look at that. So I own some puts on Chewy. Finally coming back. I own on Chewy the July. Let me just make sure I got it right on the screen. The 17th of July expiration, $44 strike puts. I bought them for $7.30. They're actually cheaper than that, right? I actually, bought them for $6.76. There we go. And those are trading right now for $5. Well, $6 to $6.30, $6.40. Okay. Chewy is a half owned by PetSmart. It's a company that sells dog food online. Chewy at the beginning of the month wants to go down to its monthly pivot, which is at $40.71 per share. Is Chewy, although it's a cute company and kind of neat and kind of cool, is Chewy worth, what's Chewy really worth? Let's look at let's quickly just run through the fundamentals here. This is what I think will be one of our $1,000 trades. It may even, I don't think it has the potential to go bankrupt or anything, so I don't think it has the potential to be a giant. Look, Yahoo Finance, which is not the end of the conversation, states this is an overvalued stock, and it really is. If you look at the fundamentals, profit margins are -5%. Return on assets are -21%. You can't have a long-term profitable company if you have a negative return on assets. You can't do it. It's not a thing that actually can happen. In the short term, the stock market is a voting machine. Right now, everybody's panicking and voting and whatever else. But in the long term, as Buffett and Graham would say, it's a weighing machine that will look at companies based on their actual true value and their ability to return profits to shareholders. And look, listen, if you don't make money and you aren't making money from the warehouses you're building, which they're building a bunch more, then you're not able to produce profits. And if you're not able to produce profits, you can't pay a dividend. And if you can't pay a dividend and you don't have any profits, your shareholders are going to dump the stock eventually. They have $4.8 billion in revenue. They do have quarterly revenue growth. They do not make money. They lose $230 million every time they report. And the diluted earnings per share are negative 65 cents. They may report a blockbuster quarter. It doesn't really matter. They have total cash of $212 million, but they only have 57 cents for every dollar of short-term debt. That's the current ratio, my friends. And the book value per share is negative 98 cents. The fundamentals here are not good. Now, in the short term, people got lucky. No, okay, let me rephrase it. People didn't get lucky buying Chewy. They didn't get lucky. They bought something that temporarily could move a lot. Great. What we want to do now is we want to be the weighing machine. We want to step in and say, I don't think the company is justifiably worth, how many billions what's the market cap here? $17 billion company. It's probably a $3 billion company. It's not a $17 billion company. They don't have the profits. They have revenue, but they're trading right now at 4 times revenue. Revenue, not even profits. They're trading at I can't even. They don't have profits. An infinite multiple to their actual income. They don't have enough money in the bank, and they can't pay the debt. And PetSmart maybe will back them up for ever so long, and maybe Amazon will buy Chewy, and maybe that'll happen. But right now, it's a $17 billion market cap, sitting in the body of what is actually probably a $3 billion company. And I think that it's not too far out of the imagination to imagine that it would go $2 lower to $40.70 to the monthly pivot, or all the way down to something like $30 and get into a more justifiable range. Listen, when everything opens back up, people are going to go to the pet store again, and maybe they're going to love being customers of online blah, blah, blah. Maybe that's going to be the case. I don't know. I don't know everything, but I do believe that I know that this is not a company that is worth $17 billion or $42 a share. So let's take a look at what else do we got? What's the next sub $2 stock that can pop? I think it might be ASTC. Where's the next $57,000 trade? Scan a list. And once again, folks, if you'd like to join us, come along, just go to robbooker.com/apply, and we'll get you an application and on the phone with someone that can talk to you about becoming a coaching student. Let's look at BCRX. BCRX is a pharmaceutical company, and I want to tell you the story of BCRX. It's trading for $3.70 a share. I think its target is $7.50 a share. Been long since about $4, and I've suffered through some open P&L losses, but I love it, and it has recently recovered quite substantially. It's got missed pivot points all the way from $4.60 all the way to $7.50 and $8.60 per share. It has bullish divergences. It has bullish profit circles on the 4-hour chart. And in the short term, in the recent weeks, it has risen again. And all it has to do now is break through the recent highs just above $4. And then it's a takeoff situation. There's been a bunch of insiders, also executives and folks that work at the company buying their own stock. And that says to me that they have confidence in whatever's going on to buy their own stock. It's perfectly legal, and the wealthy elite do it all the time. This, I think, has the potential to double in price. If you had a small account and bought 100 shares for $367 right now, I think it's completely reasonable that could become $600 or $700 or even $1,000 or $2,000, depending on how fast it moves. Another small cap stock, for those of you with small accounts, that seems really interesting to me is Astrotech Corporation. It jumped up, came back down for a rest, and has recently printed another bullish profit circle, and I love it. So I like that. I think there are targets as high as $8 and so forth. It's $2.83 stock. And I think it has the potential to do some absolutely amazing, and wonderful things. Okay, so back over here, what else do we have? We've got TV and Resi, but those right now really aren't ones that I would say a lot about or get super excited about. Yeah, okay, so I got some questions from those of you that are here. stop sharing my screen, read some questions. So if I have a small account, can I do the coaching program? Absolutely, you can. Just click the link below, robbiebooker.com/apply. How much does it cost? I am not in charge of that anymore, but I think I think there's all kinds of payment plans or whatever kinds of things available. But when you talk to the folks, you can ask them all those questions. Nope, we don't work with everybody. Some people aren't really a good fit. I don't want to work with you if you're down to your last dollars and things like that. That doesn't make any sense. So this is really a program if you want to become an advanced trader. It's not for everyone, for sure. And that's the reason we have an application, is just to make sure that you're in a position to make substantial amounts of money with the experience, time, and situation that you're in right now. And all right, for those of you that are in the coaching program, thanks for being here together with all of our friends in the session today. Thanks for letting everybody else join in with us. And we'll be back on, for those of you that are in the program, we'll be back on Monday, and we're going to scan the strike zone list, the magic formula investing list. We're going to look at the bounty spreadsheet, and we're going to pile in on, I think, a little bit more into this Wayfair trade. I'm still debating how far into earnings I'm going to hold that Wayfair trade. I'm up $338 on that right now. And I have, like I said, I have 2 contracts. I bought them just a couple of days ago. So I have those ones. So we'll see how long I last in that. So once again, love to have you in the program. If it's a fit for you, go to the link below right now, robbiebooker.com/apply. We'd love to see you on the other side. And for those of you already in the program, I will see you on Monday. Catch us in the Telegram Messenger group so I can send out all these links. And I'll talk to you next time. Bye for now.